I think historically the oil industry has done a pretty terrible job of allocating capital. And I think that actually one of the things that they're most incentivized for is for growth, and is to demonstrate growth in production. And I think that it's really interesting that, like, we also thought that the price of oil was overvalued. For actually most of the last 3 years, we thought the price of oil has been above where it should be. But we came at it from a supply angle, which is that when the price of oil was up at $100 to $120, you were creating a price umbrella in which this new technology was allowing very rapid growth in production from new resources. It wasn't really a demand phenomenon. It was, we think, that crushed the price of oil. We think it was much more a supply-based phenomenon. And the big oil companies were allocating to projects that are sort of in the $100 to $120 or higher range because they actually lacked, we think, the nimbleness and the flexibility of mind in order to go after the new opportunity that was emerging. We actually don't believe that the big oil companies can effectively function in the shale oil resources, which is what undercut the projects that they're developing.
John Hofmeister was here not too long ago, and he talked about the future of the oil companies and what they're going to do. So let's hear a clip from John Hofmeister, former president of Shell Oil. Here's what he had to say about the future of oil companies.
The oil industry will stop growing. In other words, the $2.5 billion that are coming into the middle class will soak up a lot of what would otherwise be excess capacity, which would be shut down.
So Kurt Billick, there's the former president of an oil company saying oil industries will stop growing. A lot of times they point to, well, there might be declining demand in industrialized democracies, but this growing hunger for energy in China, India, will propel the industry forward. I'd like to have your comment to that.
I think that there's truth to both statements. I think that as economies mature, they become more energy efficient. And there's pretty strong evidence. If you look over the last 40 years, OECD demand for oil has actually been in a declining trend for 40 years, going back to the late 70s. And it's true that as new economies start climbing that industrialization curve, they started demanding more oil. But the technology and the innovation that allowed for the energy innovation in the OECD over the last 40 years, the energy efficiency in the OECD, is out there. And so I think will get transferred much more quickly to these emergent economies. Our view is that at least in the foreseeable future, the demand for oil is going to grow about 1% a year, which isn't a particularly fast growth rate. It's certainly far below trend GDP growth in the world.